here now, former Wisconsin Congressman Sean Duffy and Douglas Holtz-Eakin, American Action Forum president and former CBO director. Sean, I want to start with you. As a former member of Congress, you would understand or certainly be able to speak to the fact that President Biden sees his numbers dropping here. 36% of people now, that's it, approve on his job of the economy. Now, all of a sudden, he's blaming all these problems, the supply chain crisis, the gas crisis, all of it, on everybody else, taking no responsibility, taking no blame. It's much easier to launch an FTC investigation than to say, I did this, folks.
Yeah, and you know what, in American politics, people appreciate when you actually take responsibility and you try to figure out solutions to the problems that face the economy or the American people. And so, you know, what should have happened is the administration should have reached out months ago to all of these companies to figure out, you know, what was the holdup in the supply chain, and then figure out the points that government touches those clogs and try to alleviate the pressure that government creates. And if you do that, the Biden administration could have had some effort in trying to alleviate this stress in the supply chain, but to go in and do an investigation, whether it's on oil and gas or these larger companies like Walmart, I think is absolutely idiotic. Their business is selling goods, not to try to leverage a supply chain issue and gouge their customers. That's not what they do.
Right.
They want to stock their shelves and sell their goods as much as possible. And again, if you want to do an investigation, Jackie, why wasn't this investigation done 45 days ago instead of starting today and have the information come in 45 days from now?
I hear you, because they can't fix the supply chain crisis and somehow they have to explain it away. Douglas, I want to go to you because we're looking at, you know, this inflation crisis as well, plaguing Americans across the country as we head into the holiday season, another situation that hasn't been solved yet. And you've got Jerome Powell today. I believe we have the soundbite of him. I'd like to play it if we have it. He basically said, you know, inflation's we've got to take that word out of the equation. Now, we've been saying that on this show, on this network, since inflation essentially started, and they started calling it transitory. Listen to this.
How long does inflation have to run above your target before the Fed decides maybe it's not so transitory?
I think it's probably a good time to retire that word and try to explain more clearly what we mean.
Do you agree that inflation is a serious threat to our economy? And how do you intend to address inflation?
Clearly, the risk of more persistent inflation has risen.
You indicated that inflation pressures will linger well into next year.
That's our expectation, but of course what's happened is that date has been pushed out repeatedly as supply side problems have not really improved.
All right, so you heard it from the horse's mouth. It's time to retire inflation. We're going to have to live with this, Douglas.
Yeah, I think the chairman was pretty clear today that he recognizes that the Fed is behind the curve, and he had an abrupt change in his tone, singling out inflation as the primary objective of the Federal Reserve, really emphasizing the durability of the inflation problem and how undesirable it is to have persistent inflation continue past 18 months or so. At one point, he even made the inflation targeters argument, which is, look, if we just control inflation, we'll get better economic performance overall, and we'll get this supply side problem fixed up, and get labor force participation returned. So some marked change in tone. And obviously, number one, he wants to send that message to markets. Number two, he wants to send the message to the American public. Don't expect this over the next 5 years. Don't build into your plans continued inflation, because that'll make it harder for us to get rid of it.
Message received loud and clear. The Dow is down 652 points today.
Right.
And that wasn't necessarily on fears about the new variant. It was really based more on this commentary. Sean, I want to go back to you because President Biden's in Minnesota right now, and he's talking up his infrastructure plan, and he's saying it's going to create all these jobs and it's going to fix all of these problems. And by the way, we've got to build back better, too. We've got to push that extra, you know, a little bit less than $2 trillion in spending across, and that we're going to fix all of these problems by doing that. It doesn't even make sense. I don't even think the administration knows what they're talking about at this point.
Yeah, so I mean, to say that you're going to spend billions of more dollars on infrastructure, by the way, Jackie, those projects aren't going to be built for years to come, right? Those aren't jobs that we're going to have in the next 6 months or a year. It's going to take a long time to get those projects underway. But what he's doing is he's solidifying in the minds of the American people that if you're concerned about inflation, that your dollar doesn't go as far, it's his fault. You spend more money, people understand Printing and borrowing and spending money in government leads to inflation, and they blame Democrats and Joe Biden for it. But just what Doug has talked about this a lot, but what I'm concerned about with all this spending is it's not just what it's doing to inflation. What is the cost of just servicing this massive, nearly $30 trillion debt when interest rates rise? It's an issue that we don't talk about much anymore, but it is a real problem moving forward. Yeah. How do you just service it? How do you pay the interest on the debt is going to be cataclysmic for our budget.
Yeah, and Douglas, of course, we're going into the holiday season, and we're also looking at the variant. We're watching it very closely, trying to get some more data to understand what it will look like in the big picture. But this was a president who said that President Trump, former President Trump, did a horrible job of handling the pandemic, that he was going to come in, he was going to clean things up. There were more deaths this year when we have 3 vaccines in place, antibody treatments and other treatments on the way, more testing in place as well. There were more deaths this year than there were last year. I mean, how do you explain that away?
Well, I think there are really 2 very important things at this juncture. Number one, I want to pick up on what Sean Duffy said, which is the administration has a big problem. They're out there claiming that Build Back Better is going to solve the inflation problem over the long term. It's going to bring back women into the labor force. It's going to do all these wonderful things over the next 10 years. But these programs go away after a year or 2. So either they're permanent, in which case they have a huge budget problem, or they're not, in which case they're going to have no economic effect. And so they really can't explain what they're up to at the moment. And that leaves them with the pandemic as their primary economic policy problem, and they don't have a strategy. They don't have a strategy globally, which is where the supply chain problems come from. That's just labor shortages across the globe. And they don't really have a good answer to the question, hey, we know that this virus mutates. We should have expected Delta, and we should have expected Omicron. What's the plan? And so people are struggling in the face of the uncertainty about what the administration is going to do.
Yeah, I forgot, and you're right. As long as there is a pandemic out there, then there's somewhere to place the blame for the problems that have yet to be cleaned up. Gentlemen, thank you so much for your time. Great to see you tonight.